Scott, let me start with you on this paradigm shift, overused term, but it may well apply here. We've had the paradigm since the great financial crisis, and then we had to respond to the pandemic. Where are we headed next?
Well, I want to focus on two elements of this, David. So I think first is regarding interest rates, which continues to be an elephant in the room, and we've talked about this in the context of valuations. But what we have to remember is that, yes, we've been in a certain interest rate regime in the post-GFC timeframe, but when you go back and look historically, it's fascinating. The correlation between nominal and 10-year yields and S&P performance has varied by decade going back to the 60s. So we do have to be all eyes open that as we move forward from here, higher for longer rates may be part of the investment landscape, and that's just an important element to keep a focus on as we look for the impact of rates on equity valuations. Now, the offset of that is growth drivers, and we do have a new sheriff in town, if you will, with AI. Over the past decade, we've had focus on areas such as cloud computing as a driver of productivity. Going forward, enter AI. We definitely think there are going to be companies within the S&P 500 that have a very real revenue and earnings benefit from AI, but more broadly and perhaps more important is under the surface, we think the productivity enhancement that can come to the broader industrial economy is really fascinating to us. It has us structurally overweight industrials, and it has us very focused on this notion that as corporate America is better able to real-time manage their business models, courtesy of technology, you may implicitly lower the economic sensitive bias to the underlying index.
So, Scott and Laura, I must say you have something of an ally here in Larry Summers, the former Treasury Secretary, who's a special contributor here. I talked to him earlier today, and one of the things he emphasized was possible a paradigm shift in the Fed fund rates and exactly what's going on with interest rates. This is part of what he had to say.
You may see the Fed funds rate have to go up once or even more than that over the next few months. I think that there is an underappreciation in general of the fact that substantially enlarged government budget deficits means substantially more absorption of saving, means substantially more demand, and all of that means that the neutral interest rate is increased and is increased now and in the future.
So, Lori, let me turn to you. To what extent do you agree with Larry? And if so, what does it mean for your clients?
So I would say on the issue of the neutral rate, one of the things our rate strategist pointed out today that Powell seemed to kind of punt on that issue and say we don't really know what it is and kind of squirm out of it a little bit. I have some sympathy for that, but I will say as I talk to investors, I'm not quite so sure. I think this notion is completely unappreciated. I talk to mostly equity folks, and I think they are very much of the opinion that we do have to brace ourselves for higher interest rates. Not a Fed sitting at zero essentially, propping everything up with the balance sheet. And also associated with that, frankly, they're looking for, a higher run rate on inflation. So I was also, struck today by Chairman Powell's comments of really, kind of reinforcing the idea of the 2% target, because frankly, a lot of the equity folks I talk to think maybe it should be a little bit higher.
In a word, is AI going to bail us out? Scott thinks it may help us.
Look, I think that AI is a positive driver. I agree with a lot of what he said. I view it as another productivity enhancing tool, not necessarily something that's going to completely change things. But I do think, it's an important component of the idea that we do need to get used to a new world. And whether that's, more technological innovation or reinvigorating the old economy, the reindustrialization theme, I think is another paradigm shift we're going through, really reversing globalization. I think it's all part of the same ball of wax.